Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Kevin Abramson, president at CoverWhale. Kevin, thank you for joining me today. How are you doing?
Yeah, I'm doing well, Tony. Yeah, thanks for having me. Yeah,
awesome.
To chat with you a little bit today.
So we have had quite a few Insurtech leaders on the podcast, and I like to joke that about the Insurtech safari. And I'm gonna say whale might be the one that finishes my bingo card. I have no idea what other animal is left anymore. So we always give the guest a chance of kind of giving the elevator pitch. What is CoverWhale?
Sure. Yeah, no, that's a good softball to start. So yeah, CoverWhale is an Insurtech MGA, excuse me, transforming really the commercial auto industry. Our corporate mission is to use data to make the road safer and save lives. And we view this as definitely something, much bigger than just insurance. We've got a unique offering that leverages a specialized kind of risk mitigation and loss control approach. And that's coupled with proprietary technology and, robust underwriting, which allows us to kind of more precisely price risk. So we began our journey focused more on the small fleet trucking space for a wide range of reasons, which I'm sure we'll get into today, but we've got our sights on much bigger segments of the market when it comes to insurance.
Okay. So there are times in the show where I know very little about this area of insurance. Today's an interesting one for me because I actually spent the first three years of my career as a fleet manager for a trucking company, a very large flatbed trucking company. So I know enough about trucking to be dangerous. And I have a lot of friends to this day who are truckers. Now, I wasn't on the safety side of the operation, right? So when anything was safety related, I'd get safety on the phone, and they'd handle it. But move forward now to my insurance career, and I have ran into many trucking insurance people, especially on the broker side, and it looks like it's a difficult line of business, right? And a line of business that has had capacity issues over the last couple of years, where not a lot of carriers write trucks. And it's a very specialty line. And back when I was in the trucking side, we still had paper logs. We're just starting the process of digitalizing those logs, and the drivers lied horribly. Well, and we had very like it was very hard for us to track or control that, even at a large company. So what does it look like nowadays, especially the way that you guys are approaching it?
Yeah, no, I mean, it is still, it's a difficult line of business, right? I think, if I think back to why, CoverWhale was formed and why we started really focused on trucking, I think it boils down to just, a couple main reasons. Number one, I would say just complexity, right? So as as you're alluding to, I mean, the commercial trucking insurance line, it's not an easy line to figure out. Traditional insurers have struggled. They've proven kind of an inability, if you will, to leverage technology in a way that allows you to maybe operate and think differently. It's also a very high cost. When we think about commercial trucking insurance premiums, we're talking $14,000, $15,000, sometimes north of $20,000 for some drivers. So we're not competing in a market where you're selling $200 renter's policy. There's high risk involved, right? So I think you got to make sure you have your A game going. So that'd be point number two. I think some of the benefits of it, added to the complexity and the high cost. I mean, it's obligatory, right? These commercial trucking insurance, it's required. It's a key component of a trucker's livelihood. But because of this, right, truckers are more willing and able to abide by new tracking methods. More willing and open to, use technology, especially in the sense that if they can use technology, that's eventually going to help them save money, right? So if you think about on a $20,000 policy, 10% savings, that's a lot of money, right? It's much different than I think when we think about it, maybe you or me, when we're kind of signing up for our personal auto policy for $800 a year. So I think that's the third piece. And, I think the interesting thing of as you said, I mean, it's a hard kind of business to kind of get your feet beneath you. But there's a high demand, right? Commercial trucking insurance is in the highest demand it's been. It's not going away anytime, whether it's the recent infrastructure bill that's been talked about in DC or launching the apprenticeship program. Trucking insurance is it's here to stay for sure. And I think from that regard, right, it is something that we all owe it to ourselves to really figure out from an insurance standpoint. So.
Absolutely, absolutely makes sense. So how is it distributed? What is the distribution plan for CoverWell?
Yeah, so we're using and leveraging kind of the traditional distribution path where we work with both retailers and wholesalers. From a standpoint of really the platform it's a technology kind of enabled platform where agents are able to go on and within 2 minutes can typically get, a instantaneous quote or a declination. What we like to say is we do not like long maybes. In our minds, we are going to, kind of in a way, the platform is going to identify the risk characteristics of that insured and then try to match it with one of our carrier partners from a standpoint of the different appetite they have. So we do work with multiple carrier partners at this point, and really to try and offer a value proposition to our agents from a standpoint of, giving them just a wide range of, one-stop shopping, if you will. Whether that means it's a new venture, whether that's a experienced driver and one of the, the cream of the crop. We've got market partners and capacity partners where the box is kind of built accordingly, if that makes sense.
And did I understand correctly that the agents don't need to be appointed? It's like any broker can. Okay.
They do need to be appointed, but our onboarding process is pretty streamlined and very, I would say, user friendly. So
okay.
There's the case of where an agent, if they kind of see want to be a partner with us, they would go through an onboarding process where obviously making sure that they're licensed, E&O coverage, et cetera, et cetera. And then usually it's typically about a 30-minute kind of training session, if you will, to walk them through what the platform does, maybe what it doesn't do, and how they can go about to make sure that they're not confused. So it is, I think every day we are trying to make improvements to the platform. Still pretty early on in our life cycle with kind of being, formed in 2019. But last year was just a year of significant hyper growth for us. And we got to learn a lot about maybe, our customers and what we could do better, if that makes sense.
So for a broker, do I need to have certain amount of flow for you guys to be cool with working with me, or if I see one trucking business a year, is that good enough to be able to sign up?
Yeah, I mean, we like to, if I was going to say, our preference is obviously working with people that understand, commercial auto insurance, right? I don't think it's a case of, we want people that are coming here that just don't know it. With that said, though, we do have a wide range of partners. I mean, some that are kind of, hey, to your point, it's not, they don't have flow of, 100 submissions a month. And it's more the one-off type risks. And then we also do have a lot of our partners where, flow could be 200 submissions a month by some of our largest kind of partners. So we will take kind of a little bit of a wide range. But, I think the key for us is, like, look, we want people that understand this, that are not, understand commercial auto, understand trucking, and can kind of, quite frankly, kind of maneuver themselves throughout the process of the platform.
Okay. So if for brokers that do a good amount of commercial auto, it makes a lot of sense to check it out. And really impressive that you guys started in 2019, and I'm looking at the map. You're active in just about every state. Only 3 states are still in process. So that's a pretty fantastically fast rollout. Yeah, no, it's been growth. It's been great. It's been challenging as well. We've kind of had a year of significant growth. So, if I think back to 2020, we probably finished the year with roughly, call it maybe 10 employees and contractors and about $5 million of premium on the books. And you fast forward to where we are today,
last year we finished close to $70 million of premium with, now I think just today we have over 120 employees and contractors.
That's fantastic.
It's been a year of hyper growth.
Mm-hmm.
We are actively working right now. We are kind of only doing E&S right now for E&S states. And as you're probably aware, you are limited to the states that you can kind of roll out for auto liability. We are in every one of those, about 16. But we're already actively kind of submitting our kind of admitted filings. So we've got a pretty big, strong kind of mission to deliver, a strong value proposition to our distribution sources to really expand to all 50 states on both an admitted and then to whatever extent on a non-admitted basis.
Being an MGA, how do you? I come from the carrier side, so this might be an obvious question for those that are on the MGA side, but how do you handle offering a fairly uniform set of coverages if you're using more than one carrier behind you, or is that just a reality of the MGA space where depending on the state and depending on the type of risk, the coverages we can offer you are radically different?
I think it's a great question, and this is something that we talk about very often with our carrier partners. We are as transparent as possible as we can be. But unlike other MGAs, I think it's probably more traditional for MGAs to go down the path where they get maybe one partner, one kind of insurance carrier, and then they maybe have a handful of kind of reinsurers out the back. In our minds, we've tried to really choose to be, pursue more of a distributor of risk, where we do have access to, as I said, multiple carrier partners. And this allows us to kind of allocate different risk profiles to different carriers while kind of optimizing the price and risk, if you will, for what their appetite level is. So, there are instances where some of our carrier partners, if they have just, completely different appetites, or maybe one wants to play in auto liability only and somebody else wants to play on, APD or motor truck cargo. Now, the beauty for us is it's not a human who's choosing. So there's no chance for kind of adverse selection, if you will, where a human is going to choose which carrier partner gets that business. That is truly what the platform does. So it is all automated. It is a lottery system. If it kind of fits both boxes, it would kind of go by through lottery. And that's really just meant to, we don't want it where, hey, one of our underwriters or one of the members on our growth team was out golfing with, some agent, therefore they're going to kind of, or with a carrier, and they're going to move good business that way. This is really meant to be, I think from a standpoint of take the human aspect out of it. And really it's just done on an automated basis. And that really protects all of our carrier partners.
Gotcha. So truly 100% of the underwriting is passed through automated.
Yes. Now there are instances it might kick out where we'll kind of have stuff that might be on the fringe or maybe something, but we are getting to the point where it is 100% either quote or a declination, right? So it either fits the box or it doesn't. Look, we're not necessarily trying to be everything to everyone, right? So our hit ratios are still, kind of on the lower side. We'll kind of improve that as we continue to gain comfort with our carrier partners. But we really are trying to do this more from a portfolio underwriting basis or a portfolio pricing basis, as opposed to on an individual risk basis, right? So no underwriter is kind of choosing what the rate is going to be for that truck. It is, the platform is determining that at a portfolio basis level. So we're monitoring it. We, I think from a management standpoint, have about 250 different reports that we look at on a monthly basis, looking at hit ratios by types of vehicle, by state, by region, long haul, short haul. I mean, you name it. And we are trying to really understand, where are we having success? Where are we, our hit ratios maybe a little too low. We need to tweak things there. So a little bit more of the approach of, kind of trying to be behind the curtain, if you will, kind of turning dials up or down, but not done by a human, if you will, on the individual risk basis.
Okay, so very much managed as portfolio.
Yeah.
Okay. So it looks like the company's been around. Well, you said 2019. Okay. You joined them last year, but
correct.
Is there a creation myth? Is there, what led to the company being created?
Yeah, no, I mean, Dan Abramson, kind of founder and, creator of this company, he had spent many years, a couple decades on the actual insurance carrier side in an ops and technology role, and just saw, how painful that could be from a standpoint of implementation of projects on a tech side that could be, multi-million dollars, and 4 years later, nothing actually gets off the ground, and you got to change it all again. So I think that was an opportunity where he just saw there's clearly an opportunity in the market to really deliver and think about this differently. On the small fleet side as well, of 10 units and below, a ton of kind of owner operators. Our average kind of insured is typically 1 or 2 power units. So you've got to really, kind of in a way, approach that market a lot differently than I think a lot of the traditional carriers were. It's just not efficient to have a human kind of underwriting and going back and forth with agents and brokers for those size risks, right? So from that standpoint, I was really like, hey, how do we use the technology to really leverage that and then create efficiencies in in what we're trying to accomplish? And that was it. I think that was kind of, there was an opportunity there that Dan saw, kind of built 100% proprietary in-house technology, and, it was off to the races. From a standpoint of that, it's been a, quite a ride, I would say, over the last, 9 months that I've been here. And I know from the folks that were here from the early days, the organization has changed considerably from those early days, but it's been fun. It's, as I say a lot internally, startups aren't for everyone, and I will repeat that. I think that there's challenges that come with the startup life, but yeah, no question. I think just really to get back to your question, it was really just a huge opportunity that Dan saw. And, I think did what many, people can't seem to kind of do. And he just took the first step forward and really, took a shot. So there's been a lot of success, along the way of just getting each carrier partner. We've kind of evolved in who we are. And it's been fun from that side as well, where we maybe have a partner that kind of joins on and they say, hey, we only want to do maybe auto liability for 5 units and below. And then, hey, within 6 months, they're saying, all right, we really love what you're doing. Let's expand that up to 10 units and things like that. So it has been a little bit of this fast kind of change and very flexible management style, if that makes sense.
Yeah, makes perfect sense. And I was looking at your LinkedIn. So you're a reinsurance guy, like a good, 15 years over on the reinsurance side. And then even the last 5 at Tiger Risk, that was also reinsurance, right? Reinsurance brokerage.
Correct. Yeah. When I was at Tiger, I led their specialty casualty segment, which focused on a lot of, wheels business, and then also was kind of in charge of their Insurtech segment. And CoverWhale was actually one of my clients. So that's how I got to know the team and know the underworking. So I was able to help from a standpoint of kind of get some of the programs launched with regards to CoverWhale. And yeah, just kind of really got in the foxhole with the team and got to know, who the people were and the individuals, and really, had an opportunity to talk, over many kind of hours with Dan about what his strategic vision was for the firm. I think he saw an opportunity and was just really ready to just kind of put his foot on the gas and go for it. So it was exciting. It was the right time. But yeah, to answer your question, always for the last 15 years or 20 years has been on the reinsurance side. Started my career on the underwriting side with Gen Re and Swiss Re, and then the last kind of 15 years, if you will, on the reinsurance broking side with Tiger Risk as well as Willis Re.
Awesome. Yeah, that's a heck of a career. Number one question that I get when it comes to career advice is how do I get to reinsurance, right? And it's hard if you didn't start there right out of college. So it's always interesting to talk to the reinsurance people. But I gotta say, I think you might be one of the first that I run into that made the move from reinsurance to Insurtech. It seems that it's mostly primary insurance people that are making the move to Insurtech.
Yeah, no, it's been interesting. I think, my career, I've loved kind of being on all different sides of the business. I'm having the most fun here. I think it was the right time in my career to take on a challenge like this. Had never done the startup kind of, opportunity up until this, but it's been, there's been a lot of challenges that we've kind of faced here at CoverWhale. But I think, we've got a great team. We continue to attract strong talent. We're, in kind of this hyper growth mode. We've got really great, partners, and, we've got some great investors that we brought on towards the end of last year. So just kind of excited by it. But yeah, I mean, I would agree. I think it's more traditional for folks, once you get to reinsurance, kind of stay on the reinsurance side, if you will. So
excellent. Thank you for sharing some of the corporate wealth story. Exciting how big last year was, and I look forward to see how you guys keep innovating the commercial auto space. Thank you very much for your time.
Yeah, no, thanks, Tony. Appreciate it.